Welcome to the Pump and Dump channel for another video update on CNX Resources and natural gas. So today was an interesting day. It was down at 840 and then it rallied to 870. Most likely reason for that was the strength in the natural gas price. We rallied all the way up to 272. Over the course of the week, we had the bad day on Monday where the market came to its senses and realized that it was overpriced. It went down. And we seem to have settled in a trading range of 870, which you probably can see here as a line, and then 830 down here somewhere. So we're probably in this trading range here. And I decided today that when we were rallying so strongly, I decided I was going to sell some at 859. It triggered here somewhere around this time. Yeah, the reason why I sold twofold. Number one, it comes down to the intrinsic value and the pricing of the market for the stock. Intrinsic value I still think is above $10, so that's why I didn't sell out everything. But the way the market has been pricing it over the last couple of weeks, it should have been at in the low eights and maybe possibly a little bit under $8 a share. So that was the reason number one. I saw the other reason number two. If we get to the natural gas price, is probably more telling, because if we look at the chart here, we can see several things. If we go back to September, we could see here this head and shoulders pattern forming, and then I think it was around here I kind of mentioned how I thought this was a head and shoulders pattern. I thought it would go down, and it did. It just went absolutely into the toilet. I thought we would just go down to maybe somewhere into the 230s, but we went into the low 220s. And of course we came back here, and now we have the same scenario. We have here the head and shoulders pattern. So because of this head and shoulders, I would think it would go down. Of course on Monday, we will see there's a possibility we run up to 275, 276. And I would think that from there we would just go down over the course of the week. So there is maybe some upside still on Monday in CNX Resources, if that is how it plays out. Of course, there is a possibility that we run straight through, and there is actually some reason for it to run through, but I personally don't see any reason why it should do that. Coming down to why I think it won't do that is relating to the fundamentals of the futures market for natural gas, and that kind of goes down to looking at CNX Resources. Of course, I've mentioned this before in their reports. They have a hedge book in place, and a lot of their hedging is with NYMEX futures. And I mentioned in the video I did about Q3 earnings how because the natural gas price had been up here at 250, 270, I would have thought that they would add to their hedge book, and they did. So when we're up here at 290, of course, I would think that CNX Resources is busy adding to their hedge book more and more. And for that reason, I think that there is some downward pressure from the producers who are willing to sell there, and they are fighting against the speculators who are trying to push up the price and then hoping that the utilities will buy it from them, or in the market they'll buy it from the market participants. And I think that's not going to happen, because a lot of utilities have probably hedged, or most of them should have hedged based upon what happened last year. They don't want to be in a situation where they're paying $5 per MCF or even $4 per MCF. So I think that scenario of a spike this winter is unlikely. A lot of them hedged. There's their demand. We have stories from some of the players in the Permian who are producing oil and natural gas as byproduct, and they can't find a market for their natural gas, so they're just flaring it. So the supply is there, but the demand is probably not there. And for the most part, I think that because of these technical patterns, these head and shoulders, being topping formations, topping patterns, that is kind of an indication that the price movers, the drivers, are technical traders and speculators who are looking to buy it at some price here, and then they're trying to sell it to somebody else, and they don't care if it's a utility or if it's somebody who's buying into the narrative of the winter is coming and In the winter the demand for natural gas will be strong, and other stories like that. So, I mean, the truth is, of course, the demand is there, but if the demand has already been sold through the hedging program, um, then does that really have anything to do with the price that the natural gas will be trading at during the winter? And I think not. So those are kind of the reasons why I think we probably go lower. I would think that we would get back down to at least 250. And of course, because I think 250, you probably go down to 235 or something like that. So yeah, I think that we have a good argument to be made for downside in natural gas at this point in time. It's not necessarily imminent, but it is, from my analysis, from my thinking, it's very likely it will happen. And of course, I could be wrong, and that's okay. But ultimately, we don't know the future, so we just have to guess. And with that said, I would like to do the disclaimer once more. Remember, this is not financial advice or recommendations for you to buy or not to buy any of these stocks or futures mentioned in these videos. It's always an important thing to do your own research, as mentioned before. And of course, if you have questions, comments, or opinions to share you can do that in the comment section. If you like this kind of content, you can subscribe and keep updated when I put out these videos, which I probably will be doing like weekly from now on, because I think doing them daily is of little to no interest. I think like summarizing the week is probably more interesting or entertaining, let's say. So we're going to leave it with that. Remember that you have that option to subscribe, and have a good day.